Welcome to the July Market Thoughts video. My name is Maria Considine King, and I'm joined by Brad McMillan, Chief Investment Officer at Commonwealth Financial Network. Brad, the big news this month was the Fed announcing a reduction in stimulus. What do you think that will do to the economy and the markets?
I think the big thing about the Fed announcing that they are thinking about potentially someday, maybe, reducing stimulus is that it's forced the market to consider the end of the stimulus. Now, as I think I made pretty clear with what I just said, the Fed is not actually going to reduce the stimulus. At some point in the future, when the economy improves, they will start to think about it, but it's not going to happen today. The markets, of course, are forward-looking. They said, all right, well, if they're going to talk about it, we're going to price it in right now, and the markets reacted. But it was an overreaction. And markets have since recovered, both in the interest rate markets and in the stock markets. But at the same time, markets are now starting to take account of the fact that, yes, at some point this will happen. And I think that was actually Bernanke's objective. So I think it's actually been salutary, although a little bit rough. And I think in the end, it will probably be a good thing because rates have to go up as the economy normalizes.
The other news was the Chinese banking system. Should we be worried about China, and what about Europe?
That's the other thing. The domestic U.S. economy is doing actually quite well. It's not recovering as fast as we would like, but it is doing relatively well. As we saw, and the timing on this was very unfortunate, China actually has a lot of problems, particularly in their financial system, and this is starting to come out. Have they hit the end of the road? Probably not, but they're starting to hit the potholes. And this is going to become an increasingly important factor in the world economy. Ditto for Europe. We've had a very calm summer, and I think we're all happy about that. But at the same time, the European problems are not resolved. And this is something that continues in many ways to get worse. In other respects, it's getting better. But the main risks to the U.S. economy are now from outside of the country. We're doing okay, but other things could happen that really could knock us off course. It's probably not going to happen. We can probably weather it, but we should be aware of it.
And how will all of these concerns affect the U.S. economic recovery?
As I said, I really think the U.S. economy is on a sustainable recovery mode. And I think the fact that that's largely based on domestic factors insulates us to some extent from the rest of the world. For example, we're seeing consumer spending start to pick up again. That is based on domestic factors. That is based on recovering housing wealth, recovering stock market wealth, growing real incomes, although not as quickly as we would like, growing jobs. Again, jobs are coming back. We've had a little bit of a slowdown this past quarter, and that actually is both typical and not unexpected given the sequester. The sequester has slowed us down. There were spending cuts, they were necessary, they were, salutary on the whole, but they have slowed us down. But that should peak and start to decline in the next quarter or so. So there's actually a real chance that economic growth could actually accelerate a bit after the slowdown in this quarter. So overall, what we're really looking at is risks from the rest of the world are slowing us down. But on our own, we're doing pretty well.
And how about the financial markets? What are you watching there?
Well, as I think we saw with the Fed's announcement, there's an awful lot of assumed good news built into current market prices. We hit an air pocket, we had the announcement, and market prices dropped pretty fast, pretty far. I think that shows us that we really need to be cautious about the equity markets. The fact that while the U.S. real economy is pretty well situated, the financial markets are perhaps in a little bit riskier place. And we need to be very aware of that going forward.
Thank you, Brad.
Thank you, Maria.
And thank you. Please join us next month for the Market Thoughts video.